Joe, if you were an NFT, you'd now complete my collection of Bitcoin maximalists on the channel. I think
Nice.
you were the missing piece. Well, actually, I suppose I should ask you: are you a Bitcoin maximalist? I know you're great mates with Tone, so I'm assuming so.
In the bull market, people are like, kind of asking me this question, and my answer is pretty much the same. I think Bitcoin is undeniably the best money. Now, everything else is undeniably speculative and not money, for sure.
Mm-hmm.
So that is my position as a toxic Bitcoin maximalist. You're not going to find better money.
Oh, you're a toxic one. Good.
Yeah. So like when you try to tell me that your money is better than Bitcoin, you cannot replicate decentralization. Most important buzzword, in my opinion, when it comes to money. So that is my position on Bitcoin and other cryptocurrencies, and why I'm a toxic Bitcoin maximalist, and why I just straight up shit on everything that is calling itself a currency that, is not going to be able to compete in any way with Bitcoin and what it's accomplished.
What do you? I mean, does that sort of extend to just not trading other assets? I mean, I basically started Hardforking back in 2016 with Jesse because there was just no media around, and I pretty much learnt the ropes from the World Crypto Network, which Tone was the TA guy on that show. So he drilled it into me that Ethereum was a total scam. It would be gone. So as much as I consider Tone a great mate, I possibly missed a good investment there. But I mean, do you trade any other assets, or are you 100% Bitcoin?
The simple answer is yes. I'm willing to touch another asset as a trader,
Yep.
but I don't like doing it with 25 cryptocurrencies. I'm talking about, I traded back in the day when there was no stable coin pairs, and I know the money train coins that everyone would pop into. So I don't like to encourage people to trade altcoins, because I think you got to sleep with two eyes open if you're going to be day trading with alts. So as far as day trading, I speak the language of much more liquid markets, being an order book analyst. So I much prefer Bitcoin as a trader, and altcoins. I can dabble. I've been there. I've done that, but it's not my main bread and butter. Education is so important right now. We just went through a bull market. Family members were telling family members to buy at 60,000. We've seen this at 20K. We know what this looks like. So education, I think, is kind of the thing that Bitcoiners that have been through cycles like this need to, kind of shift gears and focus on: dollar cost averaging, smart investing strategies, and education. Why are you actually buying Bitcoin, and why should you not panic sell it and blow your whole load in one trade or one purchase, right?
Very true, very true. Yes, I'm really looking forward to hearing some more about Embily. Jesse and I actually had quite a bit to do with the project when it launched. We did the marketing, got to know Alex very well, got a bunch of sign-ups, and then obviously it went through the whole MasterCard drama. So it'd be great to understand what happened there and how Visa's come to the table. What's coming next for you guys. Well, do you want to hit some charts and a little bit of news first, and then go into the Embily stuff? Or
I think I can tell the story of what happened over the past 4 or 5 days, pretty easily, and I think I can get you to understand what I'm trying to say here. It's a little bit rocket sciencey looking, but it's a lot of logic, just but maybe it's a little bit of advanced logic sometimes. This is a lot of noise, right? Then let's kind of silence some of that. All this means, all these different bands are, to simplify this is 1 to 2.5% distance from price. This is 2.5 to 5% distance from price. And this is 5 to 10% distance from price. So basically, as Bitcoin was grinding along this area in the low 30,000s, entering this range, the 15th of July, it's not quite a week ago. And then grinding through this area, it basically made things seem a little more bearish than they were. And I think that's simply because we had a weekend mixed in there. So the support was clearly static. And by that, I mean, they were holding their ground. They left their orders in the book to get filled. And as you can see, the severity of the colors represent how much more dominance there is in that section of price from distance from price. So, obviously only one side can control the band, right? You can't have an equal ratio dominance on the sell side as the buy side. So what we did was the weekend made things feel a little bit more bearish than they should have been. It's because we would grind it through a weekend. There's typically less trade volume. There was a little bit less, price movements, and I prefer this calm weekends because of CME gaps. But that led us into people, really getting panicky, and we dumped into massive support. We're talking massive control of the 5 to 10% range. Blue is a more severe color in my system than green, which is a strong dominance of the 2.5 to 5% distance from price at this point. And then obviously you had a number of 1 to 2.5% signals that are all, in my opinion, considered tradable bands. Obviously, you want to watch your risk as a trader. But as expected, we popped out. It was a great looking bottom. I mean, this is about as clean as it gets. You guys are seeing a good example. There's periods of market where they're just, you get little flashes, a little signal, and it's a scalp. Signal, scalp, signal, scalp. But there's great signals up in here. But this is, think about this one. This is a cluster of signals, triple band confluence screaming at you. This is a bottom. And it just made sense that people overreacted walking into the week after 2 extra days of going sideways along a bearish territory. But we're popping right out, and basically as expected. I mean, this is exactly what happens. The longer the time you spend in bearish price zones, you give the book time to become more robust on the sell side. You had sellers chase the book, right? So now that we spent so much time in the low 30,000s and even dipping our toes for almost a full day or whatever into the 29s, that gave sellers the opportunity to become more fearful and stack the book with orders closer to that price point. So now we're starting to get, this is a little probe signal that got blown out. That's fine. Someone probably pulled an order. But this stuff up here is what's starting to concern me. That once we started to poke out and a breakout got capped. And that means that we probably have a lot of action. In fact, we can kind of look at it right here with order book top levels. We could see some of the action. It looks pretty thin on the screen, and I don't know if you can see it well, but there was a buy wall, a sell wall here, a sell wall at 32.8, and a sell wall at 33 flat. So there's a strong sell zone. We can see him here, 32.5 is right here with 153 Bitcoin. It's a decent amount of money to punch through it. We have back-to-back triple-digit Bitcoin stacks at 32.8, 32.9, and 33 flat. So that's this cluster here. And then we have a little bit of thin air, but this is what happens when you rip to the downside and you stay there. You give the book time to mature on the sell side, and now we're talking triple digit walls in the low 30,000s, where this should have been probably in the mid 30,000s.
Joe, can you, because you're such a wizard at this order book analysis, I get mesmerized by it when you read it like a horse race. Can you explain to the audience the difference between perpetuals and spot and which one's leading at the moment?
Yeah. This is actually, there's 2 ways that I look at this as well. This is spot markets. This is perpetual markets. Now let's explain the difference between the two. And I can stop screen share briefly for that explanation. A perpetual market is simply perpetual inverse swap contract is kind of like a futures contract and a spot trade had a baby, where a futures contract has an expiration date and a number of other signatures about it. You engage in a trade like a spot trade, but you can short the market or you can long the market in a perpetual contract that doesn't have an expiration date. And the one thing about a perpetual that I would say the main difference between that and a spot trade is that you can add risk to your trade in the form of leverage on a perpetual contract, which is a double-edged sword. It can either make you money or it can lose you your money much faster. So that's spot markets and perpetual markets. Is that kind of did I do a good enough job there, Leanne?
Yeah, and who's leading the race at the moment, or is it even?
Yeah, so let's take a look, because this is something that I've actually been modifying a little bit. So this is the ratio dominance. I might even need to go back to a more basic view, but I just changed it. I could probably change it. But so basically the point is that this band here represents 1% to 10% distance from the order book. And basically
so that's price from the order book, yeah. 2%.
This is actually a ratio. Yeah, this is a ratio representing that from this 1% to 10% distance from price, there is a ratio dominance, or there is of one side or the other, or it's relatively neutral, right? In this case, in this particular case, you can see that our line was, we have a value right over here illustrated in that top left corner. We have values at 70%, a ratio of 72. Divide that by 5, so about 13 to 1 or so, 14 to 1. That's how the order book was stacked. The sellers had overextended to such a point that it was such a massive ratio discrepancy across the board between 1 and 10%, a whole aggregation of orders. Such a massive dominance in that section in this particular price crash that is how I would read a spot market, to say, look, spot markets are clearly bullish. And then to do the same thing to a perp market or perpetual market, I would look at the same thing. And you can see that the ratios are really like a humongous difference. There's about a 3 to 1 ratio on perp markets at 15.9, roughly 3.3%, 3.3 to 1 versus a 14 to 1 or so, right? On spot markets. Spot markets were sitting there. They wanted their orders filled. They were very confident. Whereas in this market, over time, perps have gotten less and less certain. We're talking ratios of 1 to 1, close to 2 to 1, and we're talking about getting, more bearish at times the further down we go, and getting more bullish at times the farther up we go, which is not how a market should react. We should react more less emotionally, and we should act more logically, right? And when you see perps flipping red down here and effectively entering a negative ratio, that's saying that the market is still very emotional and susceptible to traps, psychological traps.
So if anyone didn't understand any of that, basically Joe developed this system because he was able to read the order book, which is that thing most of us don't even really look at. It's that flashing red and green symbols, and those colors represent basically those orders. So they're color bands to show where the support is. So I know, Joe, you're an amazing scalper. Is there a chance just to look at a slightly longer term chart, like a 4-hour at least?
Yep, let me get that up. I think you're the only time that I ever look at the 4-hour.
I'm the only one that requests a 4-hour chart.
Oh, you know what? That every time we do this, I think I move my Bitcoin logo. So I mean, look, I do. The reason why, let's just real quick, the order book is a condition, not a time frame based condition. It is a condition of the market that I act on in real time versus a moving average crossover or XYZ, where the market has to slump back in one direction and you're going to miss, let's say 10 to 15% maybe of a move. And then you get in to try to catch 60% before a death cross, and that death cross doesn't come until 20% off the top, right? So in a trade, let's say where you're using moving averages, you're using lagging data. Now, the order book is live, real-time, actionable data to make a trade. And
perfect for scalpers. Perfect for scalpers.
It's perfect. It's a condition-based trade, not a time-based trade. So even though I look at small time frames, it's because the data is printed at the end of each candle, which is more significant to me on a smaller time scale. But Leanne, why don't you take the reins on this 4-hour, because this is more your world.
It's basically, I use Joe's methodology just to confirm my own chart, and this is, it's telling me that it's a no action zone still for me, but it's giving me confidence that there is support in the books, and I like seeing that. It's a no, like, Sean, I know you've been trading the range, so for you this,
yes, I just went short.
Pardon?
I just went short.
Well, yeah, I think there's a short signal on Joe's things for a low time frame.
There was. I know it's there. I was just, there is coming.
I think if you go to
that range is getting smaller and smaller.
Yeah.
I know. I went to the 5-second because I just wanted to really.
Joe trades sometimes the 5-second chart.
I like that.
I mean, that's next level brain functioning, right? Or insanity. Which one is it, Joe?
I've heard of 1 minute man, but 5 second man.
Joe's like, I'm taking a short. I'm like, what chart? 5 seconds.
Yeah, we've had this conversation.
I'm looking at the daily.
Yeah, it's a little crazy sometimes.
But when I'm in a scalping mood, this methodology for me is really nice. I think, Sean, you might be a big fan.
It's great. It's great. A great scalping tool. I mean, I'm not trying to toot my own horn here, but if you have a proper strategy that includes a stop loss and adjusting your stop loss and a profit when you're in a profitable position, this strategy tends to get you in, you know, in very small margins of error.
Yeah.
It has a good tendency to get you in as a scalper without having to dunk your head underwater for too long.
The only time Joe and I had serious trauma was during the COVID crash, March last year, right? we were layering in, and the signals were just getting ripped through, weren't they?
Oh yeah, I mean, dude, there's been a couple times. The breakdown on the daily. You know, this is a CME daily, but you know, this breakdown was filled. I mean, let's look at the 4 hour. I'm pretty look at this. We had gold mines, so I know we didn't distinguish the difference between the gold, the ruby, and the. This is supposed to be the 5 to 10% band. This is the 1 to 2.5, and here's the 2.5 to 5. The 5 to 10 is generally my trend bias. The gold mine is usually very, very telling of that trend. And so you're usually going to put your money on the gold mine, you know, even at, you know, 1x or very low risk exposure, the gold mine is a great trend bias indicator. And during this crash, we were just ripping through gold mine, through ruby mine. Ruby mine is the most significant one. Obviously, if this was a 5 minute, you would just see a straight band of ruby for probably 4 hours. And we were just shredding through. I mean, look at this wick. Took us all the way down to 30 flat, lower on some other exchanges. And support's been trying to come back in. You know, we have some more ruby mine. It's been good, strong trend bias. It's been a really tough market to be a bull. I feel like my worst trades are longs right now, to be honest.
Yeah.
You know, so that's, you know, that's why I was so scared. And I'm with you on no trade zone for a minute here. I wanted to take that long and stick it hard. I did, but I wanted to take it and, like, you know, really take this long for a walk. But it's like, it's just not, we're not in that market anymore.
Yep. Well, I think I would like to know your opinion on a few things. What's your opinion? We've just had Kathy Woods, Elon, Jack. Do you think that minor bounce off support was in anticipation of that? Or where are you placed with Bitcoin right now? Your sentiments?
You know, I'm thinking less and less about psychological impacts on the market, even though I know that the market is so susceptible to them. It's just that there's so many stimuli right now. I'm just focused on the signals, try to trade them how I normally would. Obviously, you need to add a little dash of pepper, you know, right now, especially in the market. You know, we had Elon Musk and Jack Dorsey and as you said, getting up and talking together. You know, and obviously it was good enough, or not bearish enough, I should say, news that it caused people to get excited about price and you know, start pumping the market back up. Look, this is a very dangerous space. We spent a lot of time down there. We met resistance pretty quick. But, you know, without something to trigger, I think it could have gone much worse, which is why it was a no trade zone to me. And look, I'm willing to look for the short because, like I said, shorts have probably been the most rewarding trades as of late, I think, since you and I have been talking over the past few months, Leanne. But yeah, I mean, it's a good looking bottom for now, and a little meeting like this, I didn't watch it. I didn't, you know, pay attention to every detail. There's been tons of bullish news coming out, you know, and it's just not impacting the market. Jack Mallers and, you know, and Lightning in El Salvador didn't do a damn thing, you know, and so it's like, which psychological stimulus on the market do we want to assign weight to? And I've spent so much of my trading career investigative journalism, doing investigative journalism while working for Block TV, focused on these external narratives and variables that can impact the market. And in my time of finding every excuse that the market should do one thing, and it does the other for whatever reason. I've just come to find it's not about those things. It's, yeah, they definitely matter, but if you spend your time searching for anomalies, you're gonna kind of miss the big picture.
It's almost as if, it's almost as if the good news only comes during the bull market, not the other way around. The bull market comes from good news. It doesn't seem like that, at least at the moment.
Yeah, I mean, people got laser eyes after Bitcoin. Like, there was no narrative pumping Bitcoin this time around. It just started happening, and then Michael Saylor got in at 9,000, and then it just started pumping wildly, and then he kind of held the support floor in that $20,000 range. I think he bought twice, in the high teens and the low 20s. So there was some stuff going on psychologically, but it was like, we jumped to 60K, we went just about vertical. We experienced numerous all-time high seasons, and just by that I mean break all-time high, continue to break all-time high for a week or two, experience normal Bitcoin pullback and bull market, roughly 30%, and then continue on trajectory, break all-time high season, and so forth, right? Rinse and repeat. And this market was so different. It was so different this time around.
Yeah, I mean, we've had some interesting stuff recently. You mentioned Kathy Wood there. I know she's upped her stake with ARK Investment in Grayscale. The other thing I found fascinating there was the Rothschilds now have a position with the Grayscale Trust as well, the ultimate bankers. And on top of that, if you look at MicroStrategy, I believe it's just over 12% of that is owned by BlackRock. So, these are very big players that are effectively dipping their toe in. That, we're not talking huge money here, but they're all new entrants to the market. So, yeah, I don't know whether they're stress testing things or trying to wrap their heads around it a bit more. But, we're talking fundamentals here. To me, they're incredibly stronger than they've ever been. Yet it feels like this market wants to go and test some lower levels. How low could we go, Joe?
Oh yeah. I'm here to bring the good news. First and most importantly, I agree with you that fundamentally speaking, this should be a market where we should be talking at $100,000 Bitcoin right now. I truly and honestly believe that. I don't think we should have stopped. I don't know why we stopped. And that, narratives, we just talked about how I don't really care about them, but I don't think we should have stopped. I think we should have kept going. Now that we did stop, I did successfully call the top, and I did successfully call my first breakdown target at 35,000. We hit 30, consolidated in the mid 30s. It made a lot of sense. Now the whole goal was to get the hell out and to get back to 50K and keep the burden of proof on the bears to convince the market that this is in fact a top. The bulls were nowhere to be found. We sat, and we've been sitting in the 30K range, and it feels like home now, right? We've been here a long time. Now that just puts more bearish targets on the table to me. My two bearish targets after 35K were 20K and 13K. 13K is basically where I see us ending because Bitcoin broke a parabola, and it's that simple. Every time we break a parabola, at some point in time, we end up doing an 80% retracement. It could take a year, it could take a year and a half, it could take 6 months, whatever. But when we break a parabola, we end up somewhere around 80% from that all-time high point. So 13K is on the table for that reason, and I wouldn't put it past us to expect a wick, some sort of nastiness below there. Combine that with the fact that minor equilibrium is somewhere around $8,400. Look, Bitcoin can crash without having massive ramifications on mining and death spiral talk and all those same fears that we went through in 2020. 2018, 2019. I think that all this is still possible and feasible. I think Bitcoin just, it popped off a little bit before its time, and honestly, it should still be going, but for some reason, the fundamentals are there and the people aren't, and the world is on fire, in revolt, in active disarray, and people are participating by typing on their keyboards and not, buying Bitcoin and actually, participating against their government as they see fit with their money. So I just think Bitcoin has been ready for humans and for humanity, and we just keep kind of not going there in mass when we should,
What does the
fundamentally.
data tell you about the importance of a retail investor as opposed to an institutional investor. You know, the last 12 months for me has been really characterized by these institutional plays. But is retail involvement more important in a bull run? Have you got any sort of factual figures around that?
Yeah, well, I don't really have factual figures, just my theories, and my theory is basically this: the market enters at some point a state of emotional buying, which means that it's going to end in a state of emotional selling, right? And the institutional players, I think, are what triggered the sequence of events that led to emotional buying, and I think that's what put us at $60,000. And again, I think we should have kept going, but obviously we then engaged in emotional selling when Elon Musk said, "Yo, I bought at 30,000 or whatever dollar cost averaging using the Sailor bot. I didn't expect it to go this high." And next thing you know, it was two Elon tweets that caused the market to crash, right? So, I think like it's kind of difficult to say, retail, institutional, especially. There's definitely influencer level type stuff going on. But I think that, it's very clear to me that retail matters. They did kick the market into overdrive with their emotional based buying behaviors. And they are now kicking it into overdrive on the flip side with emotionally based selling behaviors. And I don't think that's going to end. I have no reason to believe that that's going to end anytime soon.
I love that that thought of emotional based buying resulting in emotional based selling. That makes perfect sense. And it kind of goes back to what you're saying earlier about there's a lot of people typing but not buying Bitcoin. It's like I won't name names, but I know a lot of people pushing Bitcoin. They don't have any. And, I know there's a lot of that going on. And I do believe, and even going back further to what you're saying about education is the key. I feel like, yeah, if people are getting into Bitcoin for all the wrong reasons, then it's just, yeah, of course it's going to fall down. Of course it's going to go to 13, whatever. I mean, back in 2016, 2017, when it went down to 4,000, it almost went back down to the number that I bought it at. Of course, even I didn't feel any emotional reaction to that. In fact, a lot of us kind of knew that was going to happen. But as long as the emotional thing is there, we got a long way to go.
And Joe, we talk on this channel a lot about dollar cost averaging and that portion of your Bitcoin that is a tradable asset for our traders, and then we have our HODL stack. That is our silent form of resistance against the big boys. Whatever philosophy you have around Bitcoin. But do you have any recommendations to the audience about DCAing?
Yeah, and to tie it back together with your
he does. I heard you say skip lunch and buy Bitcoin the other day.
Yeah, that's on it. Like what I tell people all the time is, you should be dollar cost averaging Bitcoin at all costs. But obviously not to lose your financial securities in life. But I tell people, look, you can afford to skip one lunch a week and buy Bitcoin. Every Uber driver I'm in a car with, every member of society across any board, you can skip one lunch and buy Bitcoin. I strongly encourage people to be buying Bitcoin. Even
Joe, what would you say to someone who perhaps understands that what you're saying is true, but they thought, yeah, but look, the quicker money right now to be made is in trading some of these more volatile alts and stuff like that. Like, I know Bitcoin is the way to go, but I want to be making money now by trading Ethereum or even more alts. What would you say to them?
Alts.
Yeah. Let's say of your total HODL stack, most people, you got to remember, trading is about a 5% game. 95% people lose, 5% of people win. So of your HODL, you probably only want to expose 5 to 10% of that. So let's make that 10% now your 100% of what you're willing to invest. Of that 10%, I would probably, if I'm trading, mostly trade Bitcoin. And if I wanted to plant some shitcoin seeds and hope they grow in the next bull market, I'd probably throw down 5% of that, about half of my investment or whatever on about 5, 10, altcoins that have a history that I know traders have used as, I called it the money train back in the day, where before it was stable coins, you had to go from Bitcoin to Ethereum, or you had to go from Bitcoin to something else. There weren't too many stable coin pairs, and no one was really using the dollar on a lot of these exchanges, and they couldn't operate in the States, So, Yeah, I recommend playing it nice and easy. If you've been around the block for a while, obviously a lot of things did pop, Polkadot or whatever, Uniswap, a handful of coins that are new to the ecosystem, relatively new, let's say. BNB popped, of course. That was a bit older of a coin that was around in 2017. Made a little bit more sense that was considered a safe haven asset because of the audience's, the crypto sphere's loyalty to CZ, many of them, right? So it's almost like a trust in CZ is the investment itself. So, yeah, it's those money trains that I see, here and there. And if I was to expose myself to an altcoin, it would be long after a bear market bottom has probably been established, because altcoins have a tendency to not just go 80% from all-time high. They have a tendency to go 90+%. And I bet you Dogecoin is going to be 20 Satoshis again at some point, and it's probably going to go back up to 600 or 1,000 Satoshis again at some point.
What about baby Doge? Baby Doge. Rah, rah, rah.
When I see all these forks or all these kind of mimic coins, or I get tagged on Twitter, tag 3 people in this new airdrop, you'll get your chance to win 2,500 tokens of this. I see it happening all the time. I don't think a lot of these are going to make it. Most of them are malicious scams as opposed to delusional scams. And I think a lot of the Dogecoin brothers and sisters of that coin are probably just people trying to make a buck. I don't really see them as competition.
Yeah, out of all my friends that have gotten into crypto in the last year or two, whatever it is, I would say 97% of them are not in it for any fundamental type of reason.
Mm-hmm.
And
it's a funny one. I mean, these two were laughing at me a month or two ago. I had an emotional breakdown on this show
and we weren't laughing at you.
Screamed at the audience about why they should own Bitcoin. I've been doing this for nearly 5 years. The uncensorable, the unconfiscatable nature of it for me is just huge. But I've also got to be honest and say, I do trade those other alts. I mean, to me, it's an entirely different thing. I've come at Bitcoin, from those two elements. I get the inflation hedge that the institutions are looking at. I think that's driven a lot of price appreciation. But my narrative on Bitcoin remains the same and always will. It is the only crypto that is truly decentralized and unconfiscatable and uncensorable. It's just so important. And I think, with the proliferation of, what have we got now, 10,000 coins, not so many people are interested in that narrative at all. I think they will, again, become more interested in that narrative as we all move much closer to a Chinese-style situation in our Western economies. Hate to say it, but I think that's when Bitcoin really is going to have its day.
I think we all need 3 Bitcoin, don't we, to move to El Salvador? Isn't that the minimum requirement?
If El Salvador manages to keep this Bitcoin as a currency thing alive, I think they're already trying to fight it. I don't know if you guys saw that, but I think legislators within El Salvador is trying to fight that.
Really?
I just saw this today. Yeah.
Oh, shit.
So I'm a little curious about this whole El Salvador thing. I like other parts of the world more anyway.
Yeah. Speaking of regulation, you're based in New York. Is that the case?
Yeah.
So what the hell's going on there? I mean, I was just reading this morning that BlockFi are being looked at with regards to I think it's the state of New Jersey is basically saying this is clearing accounts down. I mean, how much of a problem would that be for BlockFi? And also, can you comment on the on again, off again Bitcoin mining banned in New York? I believe there's someone running for mayor of New York at the moment that wants to make it the Bitcoin city. What the hell is going on in New York is my question.
Yeah, well, I mean, New York has the BIT license, which kind of makes it stick out in the country as one of the worst places to operate a Bitcoin business. Now, to comment on the New Jersey thing with BlockFi, I was reading up on that. Obviously, that's kind of more in my spectrum as the CEO of Embily. I kind of pay attention to these things. And it seems like New Jersey issued them a cease and desist because they're saying that BlockFi deals in more than just Bitcoin and Ethereum, which are designated by the SEC and CFTC as commodities. And then they're also allowing people to deal with a couple other cryptocurrencies that are then considered securities. And so New Jersey is basically saying you need to register with the SEC and get this all lined up, because by our standards, you're breaking the law and you need to not break the law by our standards. So that's my understanding. And it seems like, to be honest, it seems like the kind of thing from my experience that it probably can be solved with the conversation and maybe some sort of quick license that you have to apply for. Usually if a state wants to enforce something like this, they don't want to stop a business from running. They're willing to, they definitely throw down the hammer, but then they say, yeah, you know what, you register this through the state for this filing fee and we'll get it rushed to the front of the line and bam, you'll be back, and and the cease and desist will get pushed back or whatever. I think it's kind of going to end up as a nothing burger for BlockFi, but it is interesting to note that with this, combine that with the other settlement that said, I can't remember which cryptocurrency this was. I can actually find it quickly though. Let's see here. Pogodin. No, wait, hold on. Paragon Coin Saga final judgment for 12 million for securities fraud against all founders, even the rapper The Game who promoted the coin. There's a lot going on. So it seems like an interesting time for cryptocurrency. We have a lot of this fundamental support for it from institutional purchasing levels to Visa and MasterCard saying we're creating better pathways for cryptocurrency to be used on our networks. And then we have, the SEC and governing bodies dropping the hammer on, cryptocurrencies.
Is that the Paragon coin from 2017?
To be honest, I'm not 100% sure. I never traded it myself. I don't have a history with it.
I'm PRG. If it's the same one, I don't actually know. It was a marijuana coin. They were token that were meant to, but there was a lot of big names.
Token.
Joe, that's where you've got to cue in the cigar when we say token, the PRG token.
I'm trying to look for a ticker on it, but I'm not seeing anything on this Northern District of California states thing. I'm
it was a California. Yeah, interesting. Possibly is that it's still somewhere on one of my old wallets.
Would you all? What are all of your thoughts on the look? For me, I just think we're in a bit of a holding pattern here at the moment. I think a lot of the big players are waiting for some clarity around regulation. We've obviously got Janet Yellen, who's asked Gary Gensler, head of SEC, to give clarity by the end of this month. So, days away. We've had obviously the Chinese mining unwinding. They're two quite big events. Do you think there's a lot of institutional money sitting on the sidelines here? Joe, maybe start with you. What are your thoughts around that?
It's funny you say that. It just sounds like the perfect storm. A bearish event on the eve of a death cross of the intermediate and long-term moving averages. It just, honestly, it seems like it couldn't have been scripted better myself. I wouldn't consider myself a Bitcoin conspiracy theorist when it comes to price, but I'm just saying from a gut feeling perspective, seeing how we're grinding along support and we're not really doing too much, a bearish narrative, a death cross, it's kind of adding a lot of things up here. And, I'm already not too happy about the direction of Bitcoin. And this is just kind of a nail in the coffin when you're talking about this stuff to me. So, I mean, I hope someone else has a more positive outlook.
Well, I read something the other day, something in Europe that they were talking about floating the idea of mandatory disclosure of people holding wallets and stuff on exchange, and so this, once wind and the traction that Joe's talking about with that emotional capitulation that might take place, that it is brewing, a perfect storm is brewing.
I mean, how much of it is like, we had marijuana, and even if you go farther back, mushrooms and cocaine were legal. I mean, if and then suddenly governments came into the picture and said no more fun, and they illegalized so many things. But if you look at it, how many people kept doing cocaine? And so my question is like how much different could it be when it comes to maybe, I guess, cryptocurrency and Bitcoin might be even two separate things, because Bitcoin is its own thing, in the cryptocurrency world, where everything else is more in the same family. But how much of it is, hey, regulation come all you want, but we're still going to go underground. We're still going to say F you to the system because really we've had it. I mean, like, how much of it is actually doom and how much of it is we're just going to have to change the way we go about it?
I think I have some good news for you here, because I've had a number of conversations in this financial world, right? And clearly in these discussions, I'll say, look, which Joe do you want? You want Corpo Joe, or you want the Bitcoiner? And most people want the real thing, right? The Bitcoin Joe. I'll say, okay, well, Bitcoin's a disruptive technology. You're a bank. You're basically on borrowed time unless you become relevant. And banks understand this, which means money understands this, which means, and they specifically, a lot of people are on the bandwagon of, we do operate within the lines, we do color within the lines, we have rules. But look, disruptive technology is kind of something that we can't overlook. That would be like saying, if the government made Netflix illegal, how would that have turned out? It may not have had the same future. Blockbuster might still exist, but I think this is a bit more different. There's no company you can sue. There's nothing that you can really shut down here. So I think that acknowledgement that it is an unstoppable force, which makes it something that you have to, almost adhere to from a traditional finance perspective, means that these traditional financial institutions are much more willing to say, you know what, we're going to play with you on all these other things and comply, but we're not going to lose an opportunity like this, and so I've been around the space long enough now, and in this particular section of the space, to know that these things matter to these institutions and individuals. And I do believe that a pushback from them is going to be sufficient for a government to really question, can we make this asset illegal or not? I think it's too disruptive and it's too hard to do. I think their only choice as a path of least resistance is to figure out how to work with it. And Chainalysis is going to become irrelevant if it isn't already with coin joins. The government's going to have to figure out some other way to stay, and banks, of course, are going to have to figure out a way to remain relevant and to convince people to give their money to these institutions.
Sorry, Joe, when you say coin joins, you're talking about mixing?
Yes.
Do you really think Bitcoin will become a scenario of lots of different Bitcoins, tainted Bitcoin, people mixing? To me, that's going to that, what I thought Bitcoin would be sort of 4 years ago. Something anonymous, a world currency, a big FU to the traditional financial rails, etc. Do you think we could end up there, or?
I think we should. By all means, we should have. And remember the French Yellow Vest revolt, right? They were talking about, we're going to go all withdraw our money from the banks.
The price of Bitcoin would absolutely tumble if that came into play. But over time, I think it would be a great solution.
Well, think about it. If during the Yellow Vest protests they said they want to attack central banking, and they did so by buying Bitcoin, they got all their money, under their mattress, effectively in control of their own funds. They were self-sovereign individuals and their own banks. This would have been a much more powerful example of why Bitcoin is so valuable, and that it actually does serve the purpose it's meant to serve, and it's ready for mass adoption. You engage in Lightning Network transactions. You engage in proper due diligence. Right now, obviously, that might be a little tough. And 4 or 5 years ago, Lightning Network was tough. I remember having to run a core node and read 20 Medium articles from Pierre Richard in order to get a Lightning node running, and still not figure half of this crap out. It's become much easier to use, and I love that. But yeah, I still feel like people need to get their heads out of their asses here and understand, look, inflation is a bad thing, especially at these levels. And what's going to protect you? Physical assets, particularly ones that can't be confiscated.
So the keyboard warriors need to put their money where their mouth is, right?
The problem with inflation not scaring people is because inflation is something not happening. Like it's a down the line sort of thing. Even if it's affecting you now, it's kind of like someone who's a heavy duty cigarette smoker. Mm-hmm. It's like, dude, you should stop smoking so many cigarettes. You'll get cancer later. And they're like, yeah, but I don't have cancer now.
Yeah.
That's a major. Yeah.
Then again, it is inflation that has fueled these institutional players. You know, that they talk about this hump rate of 15%, which is the real inflation for anyone holding cash on a treasury or in their corporate treasuries. So, you know, this is why we've seen Michael Saylor, who's been very vocal on that subject. So while consumer inflation, CPI, is a fraction of that, I think that will slowly filter through to the retail buyer for Bitcoin. The institutions have understood that. We're obviously hoping for more of a flood of them. But I don't know, Joe. I mean, do we want this to be an institutional grade asset, or is it something for the people?
It's both. You know, it's for the institutions, and they are people. You know, I don't believe in proper equitable distribution of wealth. I believe in competition. I believe in free markets. I think that institutional drive is definitely, like, it's one of the most important things of the demand of Bitcoin. It just means that bigger money is going to push the price up higher, or, you know, they're not here to save bull markets and prop them. They're also going to, you know, be there to buy and take your Bitcoin from you. So you got to be mindful of that. But yeah, I think that they're just as much, this is a money of the people. And I don't care if you're Jack Dorsey, you know, obviously the Rothschilds getting in has me a little, you know, thinking some funky thoughts. But, you know, I think the world, you know, there might be some less malicious, you know, people out there with money, you know, and I think that when the tide shifts, and, you know, hyper Bitcoinization type levels, you know, I think we'll kind of see more true colors. I think it's a little bit of a waiting game, though, for some of this. Institutions,
And
you know, how much influence can they have from money? You know, it changes.
and if you don't want to learn how to trade properly, then hodl, and you'll be just fine.
I have a story about that real quick. When Bitcoin first crashed at 30K, you know, everyone was coming. I saw something there for a sec.
Hold on. What do we got there? What do we got? Oh, we got hodl.
Hodl shades. He's got the hodl shades.
I got the whole shade.
You look good, Sean. Keep that
That
look.
looks amazing.
I just can't really see anything properly.
It's very attractive.
What else is new?
So the funny story I have is that I can't even tell you how many people came running to my Bitcoin lounge with laptop cables dripping out their arms and a laptop, and they're hunched over trying to bring in as much stuff as they can. Joe, I need to sell my shit. You know, I'm so concerned. And it's like, first off, shut your mouth and tell me, what's your strategy here? Why are you selling your Bitcoin? What has you wanting to sell? You know, I just can't lose more money. Well, so clearly you're one of the capitulators right now. You are the dumbest seller. You are someone that is engaged in emotional based selling at the exact wrong time, at the bottom. What you need to do is keep your head on and wait for this thing to bounce and then reevaluate, which is just such a common thing in Bitcoin. It shakes so many people out of their position. It scares so many hands, strong hands even. So, you know, I do think that, yeah, you know, this type of thing is not uncommon, and people do need to learn to be proper hodlers with a certain amount of Bitcoin.
Yeah, and I don't think you have to. I mean, look, being a really good trader is a difficult thing that takes a lot of. I mean, I'm not speaking from experience, but I'm just speaking from observation. Being a really good trader takes a lot of time, a lot of studying, a lot of practice, a lot of work. But being a
lot of tears.
Yeah, but maybe being an entry level good enough trader actually isn't so difficult. I think just to be kind of basic and to not get buried immediately is not. It's not an impossible task, and I'm not, and so it's more the emotional thing. If you can't get over that, then just like I said, just hodl. Stop attempting, because you're clearly not built for it.
But, you know, I tend to see the most emotional people are not necessarily the ones that bought Bitcoin on a whim. They're the ones that fully believe in their analytic methods. And they're the ones that are raging when Bitcoin dumps into a golden cross or whatever happens, right? So it's like, you know, emotional buying and selling, it happens up and down the street here. It doesn't matter if you're a complete noob. But to your point, I remember going through this journey and documenting this memory. Specifically, I remember saying, what matters more is we're learning to read crystal balls here as a trader. And I'm trying to repeatedly be a 5%er on every single trade. Is learning to read a crystal ball going to enhance my skill as a trader? And the answer, in my opinion, is absolutely not. I think that this is more a game of gambling and being a better card counter. There really is no secret to a market other than maybe some logic at times, and maybe some, a technical indicator can help you decipher some of that language that price action is speaking out to you, because that the narrative of the market is very important to me. But yeah.
Yeah, absolutely.
Talk us through your use of leverage and the different platforms you employ when you're trading.
As an American, my risk allocations are limited on generic and AmericanExchange.com. So I just tend to encourage the same thing. I encourage people to consider Bitcoin the second most important thing in your life. Obviously, family. I have a son. Most important thing by far. Bitcoin represents financial freedom and many other freedoms as a result of that. Therefore, being, in my opinion, one of the second most important things in my life, maybe as an American tied with guns, So I don't think people should be, exposing themselves to much risk at all when you're talking about one of the most valuable things you'll ever own. Think about Bitcoin Pizza Guy. You just don't know what this is going to do, except probably keep running to the upside on a long enough time scale to make you so filthy rich you can't even imagine. There's this story of PorcFest, which I just got back from. A young man would spend his entire year working and loved PorcFest, this libertarian event, Porcupine Festival in New Hampshire every year. He loved this event so much, he would save up the year, he would buy a lot at PorcFest, and he would buy hamburgers and he would flip burgers and sell them, late night. PorcFest is this nice little festival. And this guy did it for 4 years straight and would sell his burgers for Bitcoin. This was back in 2011, 2012 range, okay? By the time I'm going to PorcFest, this guy is now, no one's seen or heard of him since he last flipped his last burger, a number of years ago. Bitcoin, if you're doing the right things now, can set you up in ways that you can't imagine. So you have to consider that if you want to trade, which I strongly encourage against. I always encourage the dollar cost average. If you're going to trade, you need to realize you're putting up one of the most important things of your life, and you're risking that. So if you are to risk that, keep the risk low. Don't get greedy on this. This is way too volatile.
Sorry.
Yeah.
Hello. Jesus Christ.
No, that was a great.
I agree. No, that wasn't just sarcastic. That was very
Well,
true.
you were talking sort of 5% that you of your portfolio you trade. Mine's probably a bit more. I'm more of the sort of 10 to 15% range.
Sean's 100%, just like renegade.
The 5% thing that I keep throwing out there is that 5% of people win, 95% of people lose. Okay. So what I mean by being a recurring 5%er is that every trade you enter, you got to realize you got such a small chance of winning. So your plan, your strategy, you better be ice cold. You better be the liquid water. You need to be seamless between your trades. You need to be ice cold with your emotions. There is tons of conditioning that you need to go through, and it's probably mostly learned the hard way in order to be a successful trader. I mean, it's that simple to me, and it's such a
Agree. I think a lot of people underestimate the dedication required to become a successful trader. And even in Market Wizards, they don't look to interview anyone that hasn't had a 6-year success record. It's a damn hard sport.
Yep.
Yeah.
Sean, are you
so
all
how
those
you
things?
Trading Bitcoin this week, then, Joe?
What was that?
How are you trading Bitcoin this week?
I did well. Look, I'm not trading with the same capital exposure, and I'm not trading with the same risk exposure that I was when Bitcoin was $10,000+, probably up, I think I got bullish around 9,800. I made some good trades, I called some good tops, and they've mostly been low risk, which means, capital allocation can be a little more flexible. But as of late, I had a lot of fun during the bull market. Part of money management, I think, is to have fun. I had plenty of fun. So right now I'm more in damage control, damage mitigation. This market is clearly kind of on its own, and it's probably bearish. I don't want to be the one, sinking wholly with the ship. I definitely want to keep accumulating my hodl, want to build that. Obviously I have to sink a little bit with the ship. I am that much of a Bitcoiner that I do believe in a hodl to that extent. Hodl till death, right? But yeah, I mean, look, to me, my trade life isn't about making the massive living. Every trade that I'm trying to make isn't the trade of the year, where I am enough of a cowboy that I'm willing to be that trader. I'm willing to use and engage in high leverage. But right now, absolutely not. It's kind of that appetite has been gone for quite some time now.
Mm-hmm. And Joe, I know you've been working on this bearish trend. While it's been in a downtrend, you've been working so much on Embily. Joe is the CEO of Embily US division branch. Sean, did you have some? I know you know Alex.
Jesse and I got involved with Embily a couple of years ago. Helped out with some marketing. I think MasterCard was the provider back then. I just bought a new camera so that Jesse can stop yelling about me with my focus yesterday. So the card does work.
I got camera for like 10 months now.
I have. Well, I tell you what, the thing is, here was my problem. So I'm pretty much 100% in crypto, 100%. And I went to, obviously to buy the camera, I couldn't do it with crypto, so I needed to convert some back to fiat. Went to link up my bank account on Binance, can't do it. Only a handful of countries can do that. Went to the old exchange that I used to use, CXE, couldn't do it. So I used the Embly card yesterday to get a new camera. There you go. Yeah, I was happy with the fees I paid. I was happy with the speed. So, Joe, talk us through it. What happened with MasterCard? Obviously, Visa on board. Where is Embly at now? Who can use it? What territories? Give us the rundown.
So I'll give you kind of a broad spectrum rundown. Yeah, I call it the regulatory bomb that went off. We have a Singaporean entity that was operating with the issuing bank in Hong Kong using MasterCard as the network. I mean, things were going great, and I think we all kind of know what happened in Hong Kong. There were the protests, the mainland China type, regulations and legislations that are trying to get introduced there. So it caused a little bit of a blackout, let's say, in the company. So we had to set up new operations. And the card you're holding right now is the TTM card to the moon, which is an Embly basically product, but it wasn't really something we tied our name to directly. We now have an Embly Euro card. So to compare, this is now the full metal Embly Euro card that we're offering for now. Of course, we have gold designs and all this stuff, but I keep getting my cards stolen every time I go to an event. But yeah, this is this one's full metal. The one you're holding is plastic, but yeah, Embly Euro is live. It is in euros as well as the TTM card. It has a smaller top-up fee. So I would suggest if you're using TTM to check out Embly Euro. It might be in beta still right now, but you're going to be looking at something closer to a 1% top-up fee, which is much more favorable for the customer. So Embly is really on the up and up right now. It's taken some time. Things really shut down toward the beginning of COVID. That's really when the rolling blackouts started happening. Now we have operations up and running, and as you can see, they're functioning well. I think that it is constantly going to be our goal to make the transactions, ideally less than 3 conf for something like Bitcoin, approximately 30 minutes, which isn't bad to have immediate liquidation. I think that you can still eat dinner, and by the time you're done with dinner, you can be swiping your card. It's acceptable. The top-up fees are something that we did work on. The TTM that ranges, and it ranges a bit higher than some of our competitors. But our Embly Euro op is now offering 1%, which is probably the most competitive on the market. If I'm not mistaken, it might be the most competitive on the market right now. So Embly is really picking back up where we left off. Obviously, we have to, the world does seem like it wants to be a little more crypto friendly. So Embly is walking into a situation where regulators and banks are willing to try to make this work. Visa is getting loud about saying that they are trying to engage more cryptocurrency businesses. It's much easier to get a cryptocurrency business bank account. So, the regulations, or the regulatory landscape, I would say, is making it more favorable for companies like us to operate. I think from a minimalist perspective, I think regulators at least want to see how Bitcoin can function in a traditional financial architecture society, right? So Embly is kind of like this bridge, and as we build out our technology, it's just going to become better for the customer. We still do a lot of things for Bitcoiners. The card is still a great card. I think it's better than a lot of our competitors, like the Coinbase card and all these other exchange related cards, because they have different reporting criteria and so forth. But I think that Embly has done great things, and I think as far as bridging the gap between traditional financial architectures and neo financial architecture, I think Embly is going to be one of the big ones that finds the path forward. And we have a lot of cooperation with institutions that realize, yeah, we are trying to do this and make everything sound, especially for the customer.
What
So,
what
who's
crypto
it available to at the
is?
moment? Sorry,
Yeah,
Jessica.
I was just going to say
There you go.
what crypto is. What is the word? What crypto is exchangeable on?
Accepted?
Yeah,
Accepted.
transferable. Yeah, exactly.
So
Sorry, simple word.
right now on the Euro card, it's Bitcoin, Ethereum, it's Tether, Omni, Tether ERC20. Euro may or may not accept USDC yet, as well as Tron and BNB. I know Euro accepts those as well. USDC, I'm not 100% sure about, but I know that the USA op is going to accept Bitcoin, ETH, Tether, and USDC. Those will be the 4 accepted in the United States.
Cool.
Okay.
Excellent.
And
And at present,
so
when you
what's
load it, it converts to fiat straight away, doesn't it?
Yeah, well, all we are, the way to think about Embly, it's a refillable prepaid debit card. All we are is a liquidation process. Instead of you having to sell to your bank account, wait 3 to 5 business days or whatever kind of mumbo jumbo you got to go through, Embly has its, its sell fee, right? Which is basically the top up fee. All we're managing is the liquidation process, and we're managing the volatility in the time that it takes for us to receive the Bitcoin. So basically, for a percentage, you're getting your cryptocurrencies converted into fiat relatively fast, let's say 30 minutes or so or less, maybe give or take. And I think we accepted a decent basket, and I think it's a good service for the consumer. I might have forgotten your main point though on this, your main question that you had.
I was just wondering who's it available to globally,
That's what I was
and
gonna
what,
ask,
what
yeah.
sort of licenses have you got? Are they all country by country? But I mean, I know you're the CEO of the US, but do you need specific licenses in each jurisdiction to be able to offer this
So
card? And
that's going to depend on where you set up the operation. So right now, the Euro operation can basically serve most countries in the world, as you know, right? Being not a U.S. citizen, it can't serve U.S. citizens in a handful of sanctioned countries where, things like terrorism are potentially high, or sanctioned countries like North Korea. So there's a handful of countries in Africa, and there's a handful of countries in the Middle East, and maybe a few outliers where this card is not able to be used, or you can't be a citizen of that nation and get an Embly card. But that list is approximately 20 to 25 countries. And with the Euro op being out, it basically, all it means is that just about every country can participate in the Embly program. The only thing is that if you're not transacting in euros, let's say that you're transacting, I'm in Mexico and I apply for the Embly card, the Embly Euro product, and I'm dealing in euros every time I liquidate its liquidation to euros, then I'm also having to pay a currency conversion fee when I swipe the card. That's the only difference of why we want to set up multiple offices with more native fiat currencies. But for now, it's still a working product, and the conversion fee roughly 1%. So let's say that you're sending money to someone in Mexico and you're working. Let's say this is something I'm very accustomed to, being that I grew up in California. I grew up in a farm town. A lot of people would raise money there working the farms, and they would send it back home. So, comparing it to other services like MoneyGram and stuff like that, 2% is better than 2.5. So Bitcoin is definitely there for this service as well, to transfer money from one party to another, particularly family members or friends and stuff like that. So it is serviceable throughout the world, and the card can be swiped anywhere. And yeah, I mean, it's the Embily Euro product is pretty much there. The AML KYC stuff out there in Europe is a little tighter, I would say, than it is out here in the United States. So there is some of that going on, but everyone is just about able to use the card. I would say if if you're in a country that isn't much like North Korea, and you probably aren't surrounded by pirates and terrorists, then you're probably in a country that Embily can be accepted.
Yeah, we've got a large gaming community on our channel, and one thing we were looking at is they earn an in-game token playing Axie Infinity. Then there's literally a local guy that's coming along and buying that off.
I'll tell Joe about it.
Yeah, so we were wondering whether this would be a great solution for those sort of people. We're trying to do the math on whether it's going to work out cheaper for them to do it that way. To purchase the card is €100. Is that correct?
For the Euro op right now, it's getting off the ground. There was a free promotion leading up to a point where they started charging for the cards. I believe the Euro digital is 30. I believe the Euro plastic is 100. The Euro metal is in beta, the one that I just showed you. And right now the USA is running the free promo, and we have our card costs kind of generally mapped out. In the USA, it's not going to be the same as Euro. That price. In the United States, it's a little more normal to see something like $30 for a plastic card. So the United States is going to be structured a little differently just because of the social norms, I would say, the financial norms out here. But yeah, so that is Embily Euro, $100 to buy a card. You're swiping it wherever. There's no, staking of any coins required or anything like that with some of these other cryptocurrencies. It's pretty much a flat fee, and we run promos on this all the time. I'm going to an event in the Bitcoin Standard Conference in Mexico, hosted by Ugly Old Goat and maybe a couple others. And for just as an example, for a handful of individuals using the promo code for that event, they'll be able to get the card for €1. We can't give it for free for compliance purposes, but we can drop the fee down to €1. So we are trying to actively roll out these promotions so that people can get the card, for like really nothing at the end of the day. And because our goal really is just to make it a spendable card, but between fulfillment and making the card and making sure that it gets sent to the right person, and the processor is involved in all this stuff, it does become a little bit of a process to make sure that cards are sent out and fulfilled properly, and so there is generally going to be a cost associated with that, but in many cases we're willing to take the loss because the company's product is designed to make money on spending, not on selling cards.
Yeah, fantastic. So how should we wrap up today, Leanne? Is everyone going to give their price predictions for this time next week?
Oh, this time next week. Oh, man, the rate the world's going right now with all these.
I'll let you pick a range. You can have a $5,000 range.
Apocalypse.
Yeah, well, I have two ranges. There's apocalypse range. Apocalypse range for me would be 23.5. Okay, and
5K. So is it 5K up or down from 23.5?
Yeah, it's from up or down from 23.5.
Okay. So do you pick up specifically? Do you think it'll be 23.5 or greater, or do you have a side on that one?
I think we're going to be where we are now.
Yeah, that was going to be my answer, by the way. I'm thinking sideways and down from here, if anything.
Unless we get some, without getting political, the madness going on right now with the laws being passed even in the last 24 hours in France and England. And I mean, we only need a cascade of countries mandating the same things. And I think we may in a few weeks see utter.
Well, don't worry. You know what? Don't worry. I have the solution.
Oh, really?
Oh, my goodness.
Since when? I thought he hated it.
I know,
This was 4 hours ago.
4 hours
ago. He's the biggest troll.
Okay.
He's the biggest troll in the space right now.
So have no fear. Bitcoin is saved. Elon Musk.
Yay, Elon.
He saved it. That's why we'll be hovering, yeah?
Yeah, he's officially saved the day. Thank God.
No wonder Michael Saylor was so busy behind his computer.
We were making a conjecture that Michael Saylor would have been very excited about the word B. What was it called? The B word conference. There are other words for the word excited, but we'll leave it at that.
Jesse, you're a hodler. You can give us your prediction for next week, but I'm now much more interested to hear everyone's end of year predictions.
Well, I mean, you just said it. I'm a hodler, right? I don't really.
Yeah.
I mean, you've seen me. I love watching traders and listening to them, but as you know, I'm not really swayed, and I'm just kind of interested in the whole crypto sphere and just kind of learning and growing with it all. I don't do too much of the trading, especially not with Bitcoin. I in fact, I just told you guys recently that my spot swing trades were picking up just a month ago, and I was actually starting to have some success with that, even in this crazy bearish market. I realized there was some interesting profits to be made from just looking at looking at the kind of like, I think I was scalping basically. Is it scalping if it's within 24 hours? No, that's not scalping, is it?
Yeah, I would say
that's a scalp. Yeah.
I'll take that right down to 5
seconds. Scalp can be 30 seconds.
Yeah, I would say it's not my scalp. It's not my scalp, but I would say that's a scalp.
I was performing some. I was like, I was performing some scalping, running around.
You were doing.
I didn't even know it, Jesse.
You were doing intraday high frequency trading, Jesse.
Yeah, but
so any end of year predictions, people?
I think it's going back up. I'm long-term bullish, that's for sure.
End of the year, man. I feel like I can't even foresee tomorrow at the moment. I'm a bit.
There's bodies in the streets. There's bodies in the streets. Literally. So.
I shouldn't be laughing. I'm laughing at the man.
I'm still saying 100K end of the year.
We laugh because we care. It's the only way to handle it.
Yeah, it's the only
way. I think I'm going to buy a 20K Bitcoin in the very near future and 100K at the end of the year.
End of the year. Let's see. November. 62.
All right. Well, I could throw out my 2-minute analysis on that one.
Go on, then.
Bitcoin is a stubborn bastard. There's a reason why it's still skipping across the water. It never goes down easy. I've seen it try many times when it should and it doesn't. It really, by now it should have either been back in a bullish posture, or it should be, it should be enhancing its bearish posture. Right now it's in my eyes enhancing its bearish posture, which means that this will draw out for some time, which puts months on my next target, probably, a number of weeks to months before a flat 20K consolidation range. And then from there, look, we don't have buyers lining out the door to buy Bitcoin right now. All we have are buyers holding the line. And then if we don't have buyers stepping up, what we keep getting is pushed back to the line. Eventually that line breaks, we'll be at 20K in a matter of probably a couple weeks after breaking 30K with some serious ferocity, not just 29.5 or whatever. And then from there, I do believe we'll probably engage in some similar consolidation, some failed breakout attempts. We're still floating below the 200. By then it's probably the 200-day moving average. A lot of these moving averages are going to start curling down right into price action, acting as resistance. I know I don't spend too much time in the technical world, but just kind of explaining my foresight here, I think everything's going to start to curve down and act as resistance, and that's what's going to push us down into our capitulation levels in the lower, 5 digits, 10, 13K range, possibly with the wick below. I really think 10K is now a price that is accepted by the community for Bitcoin, so I don't think we'll spend much time, if any, below. But yeah, I think we're on a long, steady decline. I think end of year, we're probably looking at, somewhere under 20K is my best bet.
Glass half full, buying time, baby.
That's that's the honest truth. Look, I'm not here to lie and tell you what every Bitcoiner wants to hear. All I see as when Bitcoin drops is a buying opportunity where your dollar goes further. That's all it is.
Hell yeah.
62 is my wishful thinking, hopeful CME filled gap.
I think it'll be about $1 million. About $1 million. A cool mill.
Okay, 100 from me, $1 million from Jesse.
And from
Why
Joe.
not?
Take
Add a
your pick,
zero.
people. That's what the show's all about. Something for everyone.
Maybe I'll, me saying that's going to just push everybody. It's going to make this huge wave of buying, 1 million.
Yeah.
I'm calling it.
Yeah, well,
Just
you're going to take over
Jesse
John
It seems like
McAfee's,
Jesse's onto something. Jesse's
yeah.
onto something. I'm going to tell you, Jesse, I started off as a scalper in volatile markets, full-time in 2017. I traded on very rudimentary skills back then, if any. So your little story that you're talking about, totally relatable, and the streak does come to an end, and there does become a point where you're like, does this make sense or not really, right? I think it's just kind of fun to share that with you, I'm curious to see where price goes. Honestly, it is a crapshoot. I often say a long-term price call like this is like giving you a rifle in the dark and putting a blindfold on and saying hit a moving target. So you're asking a scalper is what I'm trying to say. You're asking a scalper what a long-term price call is, and I'm telling you what I see from a scalping perspective. I make the argument that I can see trends from a smaller time frame, whereas many other analysts argue that it is the larger time frames that dictate the trend. So I think the smaller time frames are explaining to me the narrative of the market, and the market is we don't have buyers. They emptied their pockets on the way to 60K. Now all we have are people holding the line, and that does not create a bull market. That all that does is makes bears more scared, and it makes them more willing to sell into more liquid buy sides of the book. So I would expect more violent selling, and that's why I say beyond that just 29.5K or 29.5 or 29 flat, there's going to be a zone. There's going to be a ton of stops that just trigger a cascade effect, probably blow through 25. That's, I guarantee there's a lot of stops there. So I just see, a little bit of doomsday going on here with Bitcoin, and it just is so stubborn that I'm willing to extend this prediction to 6 months from now. And I'm hoping that's conservative. I really do. I hope we can get down there in 6 months and wrap all this up and get the party started again. I don't think anyone wants that, more than all of us Bitcoiners, right? Most of us investors, but I just don't see it yet.
I think you said the key word there, violence. We're going to see it in price. We're going to see it in happenings. We're going to see it. Well, you're not going to see it on mainstream media, but it's happening.
Mainstream media is a violence.
Totally.
Yeah.
It's a violence to my senses.
Yeah. Full-blown manipulation going on,
Yeah.
Indeed. Okay, how are we going to wrap it up? We need something positive from everyone for the audience. First. Say something great that's going to make everyone smile.
Just keep the faith is my positive spiel. I'm trying to do it myself, so I'm getting a little bit down with everything that's happening in the world. But I am optimistic that I can just make the change that I want to see, and one of those things is having Bitcoin. And I think now more than ever, I'm proud to be a Bitcoin owner. That's my resistance.
Well said, Jesse.
Then I would just say, don't that's not that everything that Joe just said, and and everything we've been just talking about in the past 10 minutes about doom and gloom and apocalypse. I mean, it's not that bad if you think about it, because if you do the whole zoom out, I always talk about zoom out. I mean, what did he say? He said about 6 months, and then hopefully we're back at it. It's like that's not that long. If you've got enough money in your accounts and you've got enough ability to have food on your table for the next 6 months, and you're just worried about the crypto experience, we're going to be back in action in no time. And come on, we're not saying here that everything is done for. We're saying that we're in a bit of a phase. That's all. So just stick with it and make smart decisions over the next months and
eat ramen.
And eat. Well, do whatever you got to do. It's not that bad. I mean, unless you're in the worst part of a third world country and the worst part of your own financial, in which case, do what you have to do in that situation. But regardless, make some smart choices and you'll be fine. And just because things are looking kind of ugly now doesn't mean they're not going to get better. They will. That's very simple.
Joe, you're up.
100% agree with 100% agree with both of you. And I just want to add to this that with so many noobs coming into the market and as we say, blowing their loads because of the recommendations of family and friends, buy 10K. They have 10K that they can expend, right? And they're like, put it all in now. All right. I think the trick always has been and always will be to dollar cost average. And as long as you're learning the dollar cost average strategy, that is your most valuable hedge against Bitcoin's volatility. So to all the people out there, you don't need to own a full Bitcoin today. You can buy it little by little, skip a lunch a week. I don't care if you're putting in $5 into the market, $10, 100. It doesn't matter what your DCA is. It just matters that you're doing something to make sure that you secure your future. So continue to do so. If you get some better prices, celebrate. It's great for you. Yeah, the market's going to be volatile and it always will be. And look, for at least the foreseeable future, we're probably going to experience a number of bubbles. And I think since I've been trading full time, we've gone to 20K in one parabolic move, 14K from 3 in one parabolic move, and now from up from the ashes of 4K after the COVID crash to 65, after a parabolic move. We've kind of been through this enough times. Dollar cost average is always the way to go, and just don't take on the risk. Bitcoin's too important.
Very well said. And I'll just close off. Once again, talking specifically about Bitcoin here. This is another wonderful opportunity to really understand the attributes of Bitcoin. As I say, I've said it a million times. The ones that are important to me: unconfiscatable, uncensorable. Once that really sinks in, you're going to want to hold some Bitcoin, be part of a global phenomenon. I think a lot of the altcoins that you're currently in, you've possibly learnt your lessons there now. So have some Bitcoin, people. Have some Bitcoin. Good luck to you all. Joe, thank you so much for joining us today, mate. Really, really enjoyed meeting you. We'll put some links below to your content and to Embily. And Leanne, always a pleasure. And Jesse, great to see you again as well. Joe, you're always welcome, mate. It's been good to have you on the channel.
Absolute pleasure. Thank you so much for having me.
Cheers. Okay, guys.
Cheers, guys.
Thanks very much.
Bye-bye.
We'll see you all tomorrow. Cheers now.